Well, look, I mean, it's welcome. Anything that gets this across the line without more drama is good. We want to see the details of it and how it's going to play out. But look, everybody knows. Everybody, if you've been in Washington and you've dealt with this before, you know that this has to get done. There isn't a question whether it could get done or, with some confusion over it. It has to get done because it's a permanent blot on and cost for the government. So glad to see that a little bit of help on that. I don't think it was a particularly sustainable position to be blocking Democrats from voting on the thing that you are saying you want them to vote on.
Kayla, tell us about what if the country went into a temporary default. What wouldn't get paid? Who wouldn't get paid? Social Security, military families? I can't imagine that any politician would want that to happen.
No, and certainly it would really harm relationships between the U.S. and its creditors overseas. And, Treasury yields would spike. You would see a lot of dislocation in the market. But the messaging campaign that the White House is ramping up today is trying to communicate exactly how the average American would be impacted. Borrowing costs would rise, Social Security would not get funded, troops would not get paid. And then, interestingly, the administration has now pointed out that the stock market would fall. They brought that up with the NASDAQ CEO, Adena Friedman, at the White House event earlier today. And I've talked to some of the administration sources about this dynamic, and they note that in 2011, the stock market fell 17% before a compromise was reached. Of course, we have seen a far more muted response in the stock market this time around. And so there had been a belief that if there had been more market pain, then perhaps an outcome that had been more ideal would have been reached in this scenario. And what's unclear at this point, Tyler and Kelly, is whether the White House is going to try to exact more pain in the markets to get a legislative outcome that is seen as better politically for them, or whether they will be willing to take one of the two offers that Senator McConnell has put on the table.
Right now, to your point there, Kayla, the market has just in the past 20 minutes since Elon made the first report on this, it's gone up. It's in positive territory after spending most of the day negative. Tony, these crises, as you point out, this is not our first time down this path. They are manufactured crises. Why does this happen all the time? And who comes out of it smelling better?
I think it's because, I think it's nobody comes out and smelling better in it. And I say, to be clear, I don't think there's any much political pain in voting for a debt ceiling. I think that's a mistaken political understanding. There's a lot of pain in not voting for it if it doesn't happen. But the real misunderstanding, I saw somebody trying to explain yesterday, and to your point, like, I think I've been through, 15 or 20 debt ceiling increases going back to my days at Treasury Department. And there's always misunderstanding. So somebody said, well, we should do away with the debt ceiling as a concept because it hasn't served its original purpose of limiting debt. And I said, that was not its original purpose. It had nothing to do with limited debt. It's never had anything to do with limiting debt. And this is someone who was trying to explain the issue and had it all wrong. So there's so much misunderstanding about it. It is not a useful concept for talking about the debt or spending. It is a convenience for Congress so they don't have to vote on every security.